What's up, traders? We're not gonna waste any time today. I'm actually late for a meeting, so I'm gonna go ahead and dive into today's content right now. This is Steven, your honest trading coach. It's a pleasure to have you with us today. And what I'm gonna do today is share with you what I consider to be one of the best strategies that I know. And I'm gonna share this with you on a day trading time frame. I'm gonna share first a live trade I took on the Euro New Zealand using this strategy, and directly after that, I'm gonna teach you everything about this strategy so you can point out high likelihood areas and opportunities in the market for yourself and in your own trading. So let's jump right in. On the screen in front of you, you can see the Euro New Zealand. What I'm going to do before we start looking at the analysis behind this trade is let you see me taking this trade live, which I recorded earlier today. So let's go ahead and take a look at that. I'll see you there. What's up, traders? About to get involved here on the Euro New Zealand, a short trade. We're coming into a really interesting area of structure out on a higher time frame right now. So what I'm going to do, because I see some selling pressure, I'm going to explain that to you as well here in just a second. I'm going to go ahead and place this order. I have my stop and target set at 26 pips for the stop and around 36 pips for the target. With that being the case, I like the way this trade looks, so I am going to risk my maximum risk on it, which is 2% per trade. So right now I have it set up. I'm gonna click the sell button and we are involved. So what I'll do is in just a minute, I'll break down the entire analysis behind this trade and give you a look into how it plays out in just a few minutes. Okay, so as you just saw, the entry for me on this trade was right where the market is right now. I'll go ahead and circle it for you. Right there is where we ended up entering this trade. And what I wanna do is actually zoom out the chart so I can show you the analysis behind this trade and the exact strategy that went into play and give you some insight into how to start trading this way and give yourself a good opportunity to win trades using this strategy right now. So in order to do that, we're on the 15-minute chart right now, but this analysis actually started all the way out on a daily chart. So on the daily chart, the first thing you'll need to understand and know how to do in order to incorporate this trading strategy into your trading plan or to start testing it through historical data is to understand trend. For me, trend is simply, is the market making higher highs and higher lows or lower lows and lower highs? And in this specific case on the Euro New Zealand, we have a market that has been pushing down into new lower lows, a new lower high, a little bit of consolidation in here, then a new lower low. And I assumed and considered this to be a lower high because as we are sitting right now, we are in a downtrend. And since we're in a downtrend, I assume, and we do have a high likelihood of this trend continuing, so I was assuming this to be our lower high. So that's the first part of the analysis and the first part of the strategy. Now, a simple way of doing this, if you don't really understand market structure very well right now, you're not a master at trend quite yet in your trading, a very easy way to do this is to plot any kind of moving average. I personally like to use the 50 EMA. As you can see, the market's under the 50 EMA. So the first step and the first thing you need to realize about this strategy is that we are looking for trend on the daily time frame. Now, after I find my trend on a daily time frame using this strategy and the exact analysis I used in order to place this trade you're about to see on the Euro New Zealand, what I like to do is drop down from the daily to the 4 hour. So this is the combination of time frames I'm using. Daily for trend, 4 hour for some kind of market, or excuse me, some kind of price action pattern. So in this case, on the 4 hour, and I say price action pattern, I mean some type of reversal pattern. If we're in a downtrend, I want to see a reversal pattern to the downside. So in this case, it would be something like this double top that is on the screen, right? We have this double top. We know that we are in a downtrend on the daily chart. We have now broken through the neckline of a double top pattern on the 4 hour chart. So with this being the case, what I like to do now is create a zone at the neckline of whatever reversal pattern it is. This could be a double top, it could be a head and shoulders, this could simply be market structure reversing. So let's say we were moving up, I have a downtrend on the daily chart. Remember, my daily chart looks more like this, right? And say we're moving up here and this move up on a daily chart looks like this on a 4 hour. Then even if I just get something like this and it shows me a 1, 2, 3 move breaking below this little structure level, that's enough for me to consider this market continuing the daily trend. If the daily trend was down and I start to see any type of reversal pattern on a 4 hour chart, then I'm assuming that that's when that daily trend is going to continue. So in this specific case, on the Euro New Zealand, we had that break of this double top neckline, and that gave me reason to assume that the daily chart trend would continue. With that being the case, I marked up my zone at that neckline and dropped down to the 15-minute chart. So if you're keeping up with me here, I know I'm going a bit fast. As I said, I'm a little bit late to a meeting right now, so I'm trying to get this taken care of, but I also wanted to give you a lot of value today and try to get you a strategy that you can go out here and start testing, possibly using in your trading plan. And hopefully this will help you master that first step of being profitable, which is having a consistently profitable trading strategy. So if you're keeping up with me, we went daily chart for trend, 4-hour chart for reversal pattern. Let's do that just really quickly one more time. If we're looking at the daily chart, and we'll do the daily chart in a downtrend just like we are here on the Euro New Zealand. Daily chart is doing this. All of these pullbacks that you see are not going to look like just, or that wasn't even a pullback. This one would be the pullback. They're not even going to look like a straight line pullback on a lower time frame. On a lower time frame, if this is the daily chart, these little pullbacks that I have pointed out are going to look more like this. And if they look like this, and then they start to reverse, that's what I'm talking about. So again, daily chart, downtrend, every pullback you see on this daily chart is not a straight line on a 4-hour. On a 4-hour, it looks more like this, might be a little bit choppy. But whenever I see a 1, 2, 3 move, meaning a push down, followed by a pullback, followed by a break of that structure level, or a double top, any kind of reversal pattern on a 4-hour, that's when I start looking at that previous level of structure support or that neckline of the double top or head and shoulders pattern, whatever it may be. And at that level, I already have such a bias to go short, considering the fact that I have a double top on the 4-hour that is aligning with trend on a daily chart. I also have a downtrend on that daily chart with a double top on the 4-hour. I have the market pulling back up into that neckline. When we get into the neckline, all I need in order to enter, because my bias is so strong to the downside, so strong for a short trade, all I need is selling pressure of any kind. What is selling pressure of any kind? For me, a close below red candle, meaning a red candle that closes below the low of the previous candle. That gives me what I consider to be selling pressure. So you already saw the trade entry earlier in the video. What I'm going to do now is show you how the trade played out, and I'm going to talk you through the real emotions of a trader, because unfortunately, guys, as much as I wish this was the case, and I wish I could just show you a strategy and you could go out here and be profitable just because you know a good strategy. Unfortunately, that is not the case. If you want to look on the screen with me really quickly, let me show you something. This I've talked about in many videos. I call the triangle of trading success. In the middle of this triangle is your profitable trading career. In order to get there, you need to master 3 main ingredients to your trading success. They start out with your strategy or your edge over the market. That is the first step. And what I'm showing you in this video can make you or get you to a point of having an edge over the market if you do everything correctly. That's no guarantee. I'm not sitting here guaranteeing you profits if you trade exactly like this. There's a lot more that goes into trading than just knowing the strategy itself. So having that edge over the market is the first step. The second step is having a risk management plan that, 1, keeps you from blowing your account initially. 2, keeps your head right while you're trading, keeps you out of your emotions. You're not going into this volatile emotional state every time you click the buy or sell button. A lot of you watching may be going through that. It's not like I haven't been through it. There was times in my trading whenever I would click the button when the market was here for a buy trade, and as soon as it started going down, I got literally depressed. As soon as it started going up, I was calling my friends and asking them if they wanted to go out that night. Told them all I had drinks. It was no problem. Let's do it. Like, I've been through all of the emotions, and then it goes down again, and eventually I end up losing that trade. I have to call my buddies back and say, hey, sorry, we can't go out tonight, or at least it's not on me if we do. And that's like, it's a terrible thing. It really does take a massive amount of emotional stability to stay in trades like this, or a little bit beyond just staying in one single trade. It takes a massive amount of emotional stability to stick to a strategy that's going through a drawdown, which is why it is so important to have a good risk management plan that keeps your emotions at bay, even during drawdowns where you lose 3 or 4 trades in a row. I did a video yesterday or the day before where I was talking about having a 4-trade losing streak on a strategy that produced 60% accuracy. I still had a 4-trade losing streak. Now, if you're risking 5% per trade and you get that 4-trade losing streak, that's 20% of your account. 20% drawdown is pretty heavy, especially in just 4 trades. That's going to cause you to go running back home and say screw trading or switch strategies or get super emotional and try to revenge trade, eventually blowing your account. It causes all kinds of mess. So risk management is number 2 on the triangle to trading success, which is what I call this. We have our strategy, or the edge we have over the market. We have our risk management plan. And the third step is just staying disciplined. I'm going to label that with D. If you can stay disciplined to your strategy or your edge over the market, and this strategy or edge gives you a winning percentage of 60% with a 1-to-1 risk reward, if it gives you an advantage or an edge of any kind over a long period of time, and you stay consistent and disciplined to your risk management plan, as long as your edge plays out over the long run and you continue to stick to that risk management plan, it is inevitable that you become a consistently profitable trader and end up with a profitable trading career, which is right in the middle. So that's what we're trying to accomplish with all this. I wanted to go over that so that you understand that learning a strategy is not the only step to becoming a consistently profitable trader. It's the first step and something that is definitely necessary. You have to have a way of creating an edge, a profitable edge over the market, and creating profits consistently. But let's go ahead and check out the trade and let me talk you through the real emotions of this trade as we start to click. Okay, first candle prints after my entry. I'm like, okay, that's fine. Everything's good. We're consolidating a bit, but hey, at least we're going down. We haven't hit my stop loss yet. I'm super happy. By the way, this trade took over 12 hours to complete, so it took a while, and it was consistently watching a chart is something that like really ruins traders' careers, because if I consistently sit here and watch this thing get halfway to my target and then push up, and now I'll start going a little faster so this isn't just like boring. But look how much this consolidated after I entered the market. Well, I've already gotten halfway to targets. I'm just waiting on it to get the rest of the way, right? But as we continue, oh no. Now we're starting to get close to my stop loss. Now I'm in the red on this trade. Oh shit, this almost stopped me out right here. It got within 5 pips. It almost stopped me out there. How emotionally stable do you have to be to handle all of this entire period of consolidation and not just exit the trade out of fear the next time you hit break even? Not just exit the trade because it's taking too long. In my opinion, once you have a set strategy, and this, right or wrong, it's just the way I trade. Once I have a set strategy and I have a stop in a target place, I don't exit the trade until one of those are hit. Now, I'm not saying that's the best way to trade. Again, it's just the way I trade. So for me, this is 12 and a half hours of straight torture if I'm sitting here watching it. But do you think I sat here and watched my chart this whole time? Considering that once I have a stop set and a target set, I leave the trade alone until I either get stopped out or hit my target. No, I was not emotionally unstable about this at all. And eventually, because of that emotional stability, along with the fact that I'm trading a strategy that does give an edge over the markets, that gives me a profitable edge, that I've actually back tested. Huge part of this is the fact that I have back tested the strategy. I'll put a link to that video in the top right-hand corner of the screen. I have a full video on back testing if you don't know what that is. And because of all of that, I ended up coming down and hitting these targets on this Euro New Zealand trade that you saw me enter earlier in the video. So there's a little lesson on one of the best strategies that I know for trading in any time frame. Specifically in this case, it was with a day trade. I look at a high time frame for trend analysis. Being in line with that trend analysis, drop down a time frame. For me, it's daily to 4 hour. Drop down to the 4 hour for me. And once I drop down to the 4 hour, I want to see a reversal pattern. Again, let's go through this one more time because I know it may be a little bit confusing. We want to see, let's say the daily chart's in an uptrend this time. We'll switch it up. So the daily chart, we have doing this. The 4 hour chart at this point would not be doing this during these little pullbacks. These little pullbacks that are straight lines on the daily chart are going to look more like this on a 4 hour chart. And what I want to see is the point that we have a reversal, a break of resistance, or a 1, 2, 3 move. And at that point, I want to start looking for possible trades at that previous resistance or at the previous resistance that was broken. Any type of reversal. After I get a reversal on the 4 hour chart, I'm dropping down to the 15-minute chart in my reversal zone that I pointed out earlier, like the neckline of that double top or a previous resistance or support that was broken during that reversal. And I'm looking on that pattern, the 15-minute chart, chart, not pattern. I'm looking on the 15-minute chart for a sign of bearish pressure coming into the market, in this case, bullish pressure, obviously, if it's a bullish trade, when all I mean by that is a close above or close below candle. In this case, I used this red candle that closed below the low of the previous candle. For stop loss, by the way, stops and targets, my stop was just above my red zone, just above the zone that I assumed would push this market down, and my target was at a 1.4 to 1 risk reward. So there it is, the full strategy. Hopefully it was helpful. If so, make sure you click that like button. If you're interested in some more advanced training, we have the EAP training program listed below. You can find that at the top of the description. In that program, we have a full training course that goes over all the strategies I use on a daily basis. And the course also comes with 3 to 5 email analysis trades each and every week so that you can see how I'm trading, the strategies that you learn in the course. And with that course, you will have priority email, meaning any questions that you have about Forex trading. You can email me and it will be me directly responding to those questions and helping you get through whatever your struggles are as a trader and hopefully leading you down the path to a profitable trading career. If that's something you're interested in, again, link is in the description. If not, that's totally fine too. Just make sure you're subscribed here because we come out with content just like this each and every week. I hope you have a great weekend. I hope you trade green this week and the next, and I will talk to you in the next video. See you guys soon.